Another week, and we're going to kick off another broadcast. I am really glad you guys are here. I miss you guys during the week. I just enjoy getting together and chatting about stocks. So, hey, today we're going to talk about exchange traded funds, and there's based on some of the discussions that I see in not only my Discord but others. There seems to be a little bit of confusion around ETFs. And maybe this crowd doesn't have those issues, but I thought I would just throw it out there and maybe we can chat about that a bit. So I think that'll be helpful. Before I forget, we are going to have the one and only Dapper Dividends, Russ Knopf, on the show next week. So he and I will be tossing around the pros and cons of dividend investing. I think you guys will really enjoy that. So I'm excited about that next week. But I'm also excited about tonight. So I think what we'll do is just go ahead and kick into the ETF. So I'm not going to show the the thumbnail for the slide. So, and I'm not going to have slides tonight, guys. So I thought maybe I'd give you a break from slides, but we are going to look at a couple of screens. So exchange traded funds, many of you will know that they are funds that are designed to actually hold shares of different companies, and then we can buy into pieces of that company. I'm going to give you a little bit of an example here in a little bit. But before we get into that, let's take a look at, how do I do this? There we go. So VU is the Vanguard S&P 500 ETF. So I'm going to show you. I've already pulled these up, so I don't have to go and find them. But let me get rid of that. So, but VU is the S&P 500 ETF that is Vanguard's ETF. And what I want to show you down at the very bottom. Oh, we were at the very bottom. Let's see. Maybe portfolio composition. Maybe that's what we want. Well, that's not very helpful. Where did it go? All right, we'll go to the SCHD. It was there earlier. I don't know what happened to it. I promised that I looked at that beforehand, but it is gone now. So let's take a look at SCHD. This will be, I think, good enough. So you can see that SCHD, which is the Schwab U.S. Dividend Equity ETF, it is probably the most popular dividend ETF out there. A lot of our friends own shares in SCHD, but you can see here that their holdings, their largest holding is Broadcom. So they got about, let's just say 5%, 5.07% of their portfolio assets, excuse me, are invested in Broadcom, ticker symbol AVGO. Their second highest is AbbVie, and then Merck, and then Home Depot, Amgen. So if you just take a look at the AbbVie, Merck, and Amgen, if we added these numbers together, that's 9.4, and then Amgen is about 13.4 total. So about 13.4 per, oh, wait, here's Pfizer down here too. That's 3.4. So that's 16.8% of the portfolio held by SCHD is in pharmaceuticals. So the point of this is that each ETF that we invest in is we're investing in a basket of stocks. So I brought, somehow I've lost me. Oh, there I am. So I brought my trusty little bowl. You guys might remember this bowl from the Hershey's video that I did. But it still works. It's good. It doesn't have any more Hershey's candy in it. But I thought what I would do is say, we've got this basket here, and we'll call it a basket, even though it's really a bowl. So we got a Sharpie. Maybe this Sharpie represents a stock. Let's say it's Broadcom. Oh, and here's an Apple Watch that I never wear, but it, for some reason, was sitting on my desk. So Apple Watch. Maybe this represents Apple. I won't throw that in there. And then, we have here a pen. I don't know what that represents. So let's just say it's Texas Instruments. And then we have, oh, this is great. Some fingernail clippers. I don't know. Let's make that Pfizer. And then we got a set of keys here. Let's make that, Tesla, maybe. I don't know if Tesla even uses keys, but anyway. And then I have my wallet here. So maybe this is, JP Morgan. I don't know. And I think that's really all I have to throw in here at the moment. But you get the point, right? So the ETF is the bowl. And what's inside this bowl are the shares that are held in that ETF. Now, when we buy shares of the ETF, think of it slicing this way. Every time you buy shares in the ETF, it slices just a very tiny, tiny, tiny slice all the way through down through all of those investments. And that slice of all of those investments belongs to you because you are the owner of that slice. I've heard people talk about, let me get back out of this now. I've heard people talk about ETFs as if they are stocks. So are they stocks or are they not stocks? I would say they are closer akin to mutual funds than stocks. So, a lot of times people will go, oh, this stock is way undervalued. I'm going to buy this stock. And then, you get to research the company and understand why it's undervalued. But an ETF doesn't get undervalued because there is no value to the ETF other than the underlying stocks. So if you say an ETF is undervalued, that means that somehow the combination of all of the stocks that it owns is undervalued. So you can't really think about an ETF, investing in an ETF, the same way that you think about investing in a company. So how do we then do this? How do we, measure how much we have? Because there's a big risk here, right? One of the risks that we run by investing, if you invest in a lot of ETFs, one of the risks that you run is that you are going to be, or could be, overexposed to a particular company. And let me pull this back up and give an example of that. I wish Vu was here. And I'm going to refresh this page and see what happens. Oh, it's back. All right. Here's Vu. So here's the holdings. You can see that in the S&P 500, Apple is the largest at 7%. The Microsoft is second at 6.96%. So if I were then to go to, let's say, iShares. No, I don't want to do that. Yeah, that's okay. So this is the DGRO. And so you can see that there are a lot of investments for DGRO. Let's look at, this is, which one is this? Let me go, sorry to move around. This is is this SOX? Let me find it. Yeah, SOX, SOXX. So you can see here that the holdings in SOXX have NVIDIA as its top holding, and the weight of that is, for some reason I don't have the ability to, I have to go down. All right, so let's check out the weight. The weight of NVIDIA in SOXX is 10.84%. So somehow you have to determine as an investor, when you're buying multiple ETFs, what the exposure to your portfolio, what exposure your portfolio is to individual holdings within those ETFs. And you don't necessarily have to do that, but it is important, I think. And so there's a lot of software out there. There's some apps that will talk about overlap, and you have to be careful there because overlap can go both ways, right? So you may have a small ETF that would be 100% overlapped with an S&P 500, but the S&P 500 would only overlap just a tiny bit, right? Because there's only a few shares in this one and there's 503 in this one. So I want to show you how I look at ETFs. I invest in 3 ETFs. I invest in VU, I invest in DGRO, which is a dividend growth ETF, and I invest in SOXX. So let me go, and I use Morningstar for this. I do not have an affiliate agreement with Morningstar. So if you want to check into Morningstar, just go to their website. I think it's like $249 a year or whatever. But I wanted to show you. So first of all, I will move this. This is this is my, what I look at really every day, my portfolio. But then they have a component here called X-ray, which I find to be really exciting. And it's got a stock intersection. You see that right here, stock intersection. And I say that, but it's not pulling up. Oh, it's frozen. Isn't that awesome? It says wait, so I'm gonna wait. But I'm gonna go ahead and click on stock intersection, and hopefully it will come back up. That is the only downside to this Morningstar app, is that sometimes it freezes. There it goes. But it just comes back, and when you're live, it seems like 30 minutes, but it's really only about 10 seconds. So this is basically my portfolio, and we're going to talk maybe a little bit. I see a question in here about Pinnacle West, so we'll talk about that here in just a momento. But before we do that, let's go to, and I want to kind of focus us here on Microsoft. So you can see that in this report. Maybe I can make this a little bigger for you guys. Maybe, does that help? That helps a lot, I bet. So you can see that Microsoft, I actually own shares that equate to 4.3% of my portfolio, but I also own shares in VOO, VOO, which holds a portion of Microsoft, and also DGRO, which has Microsoft in it as well. So when I look at my exposure to Microsoft, I can't just look at the shares that I own. I also have to look at the shares that my ETFs are exposed to. So you can see here that instead of a 4.3% exposure to Microsoft, which is what you would normally see, it is really that I'm exposed to them by 6.42. So the exposure in my portfolio, I own shares equal to about 6.42% of my portfolio that are Microsoft. So I think that's important, because I want to show you one other thing, actually a couple of other things. So the first question is, I invest in Microsoft, but I do not invest in Apple. But do I own Apple? And the answer is yes. So let's go down and find Apple. We'll find Apple right here. I own nearly 2% of my portfolio in Apple, or I have exposure. About 2% of the portfolio is exposed to Apple. Why is that? Because I invest in VOO and I invest in DGRO. So if you ask me, do I have shares of Apple? I would say no, because I'm thinking about my individual investments, but my portfolio is exposed to Apple. And here's one more. I don't invest, or I have not invested in NVIDIA, because that's really hot right now, right? But I do have exposure to NVIDIA. You can see it right here. 1.43% of the portfolio is exposed to NVIDIA. So I thought that was helpful. And I'll just share one other thing. Let me go ahead and take this off the screen now. So one other thing is, when you're buying shares of an ETF, that ETF is priced based on its underlying holdings. But it gets a little complicated, because can the share price of, let's say, SCHD get out of balance with the value of its holdings? And the answer to that is yes, that can happen. It won't be much, but it can happen, because you might have people buying and selling in the stock itself, not necessarily at the same rate they're buying and selling the ETF. But what happens is there are these people out there called arbitrageurs, and they're out there looking for those disconnects. So if there are any, they're small and they only last just a short period of time. So I don't think it's worth really talking about, but I thought it was a good question to ask. So I'm glad you asked it. Hey, Thanks. All right. So that's ETFs, my friend. Hopefully that was helpful. If you got any other questions on ETFs, I am happy to answer them. I am not an expert in ETFs because I really do enjoy individual stock investing, but I do hold those three ETFs for a variety of reasons, but it's not really worth going into. All right, guys, let's see who is in the program tonight. We have Pat. Looks good. Pat's down in the Gulf Coast somewhere, not the Gulf Coast, but he's out on an island somewhere, and he won't be back till April. But every now and then he gets internet, and so Pat, it is great to have you here tonight, my friend. And I hope you're kicked back with some kind of Mai Tai or a little umbrella kind of drink, maybe. I'm not sure what you drink, but I've got a Diet Pepsi again tonight. I think I had this last week as well, but it is a different one, so I'm going to go ahead and take a sip. Hey, I'm thinking about next week. My ADD's kicking in. I'm thinking about next week with Russ, maybe throwing up some video, little snippets of some of the stuff we have around the farm. You know, we talk about my chickens a lot, but I also have grapes and peaches and bees and stuff like that. So let me know if you're interested in seeing something like that. I know it's not stock related, but I thought it might be interesting. So if you guys want to see something like that, just give me a thumbs up or something. And if I don't get any thumbs up, I'll know not to do that next week. So, all right. So Kevin, we got another Kevin in the program. Kevin Mendoza, welcome, my friend. So Brad is in the house. Good to see you. Greetings from Canada. Shamir is on the program. It's great to see you, buddy. Slammer 6789. I just love seeing that name. I don't know why, but hey, it is what it is. So how's your chicken picking portfolio doing? That's a great question. You know, I've struggled, and Russ and I talked about that a lot, but I have struggled trying to figure out how to get chickens to pick stocks at random. And you know, because I could pick stocks, and if they do a certain thing, that would be the stock that they would pick. But how do I get them to pick from a wide range of stocks? You know what I mean? So I don't know. I'm still working on that. It's a great idea, but man, chickens are kind of fun. I'll show you some video next week. That'll be good. All right. Pinnacle West approved their rate hikes. They absolutely did. And let's chat about that. Let me go down and welcome some other friends here, but we'll chat about that. So Greg is in the house. Welcome, Greg. Greg's a great contributor in the Discord. If you're not a member of that, you can find the link in the comments of this live stream. Love to have you there. Join us if you are so inclined to do so. Kevin Rayberg. Well, we got K cubed in here now. We got 3 Kevins. He slipped in quietly. And we got Billy. Billy's over in the Philippines, I think. So welcome, Billy. Good to have you here, my friend. All right, John J. How exactly ETF price is set, given it can change daily, hourly? It can change. I think it's every 6 seconds, or whatever that is. But hopefully, I hit on that. The market tracks what is being bought and being sold and what the price is, and those arbitrageurs will come in there and make sure that it is relatively close to the underlying stocks that it holds. So I don't necessarily want to get any more complicated than that because I just don't want to, and I think we would lose everybody if I did that. All right. Shamir, timely discussion as I bought some SCHD today. Eventually want VU to make up about 50% of my portfolio, and SCHD about 30%, with the rest in individual stocks. I think that's not a bad plan. I have about 30% of my portfolio in VU. I might be back up to 30% now. Those of you who know me or are in the Discord know that I had to liquidate some investments in order to switch money into a different account. and I think, put that money back to work, all of it, but we will see. And SCHD, I consider my individual stocks to be my SCHD, although I've kind of stopped. I haven't really stopped, but I benchmark against SCHD. But the past year or two, SCHD hasn't performed very well, and so I have picked a DGRO as the alternative. Because I don't want to say, hey, because SCHD is not doing well, then I'm doing great, right? I want to compare against a more dividend growth oriented ETF, and that is DGRO. So I compare to SCHD, DGRO, and VOO. And I share that in my the Discord inside my inspiration channel. So if you're not a member of that, you can see how to become a member of that in the comments to this video. But Shamir, I think that sounds actually really good. So you'd have 20% of your portfolio in individual stocks, and then 30% SCHD, 50% in VOO. I think that's fantastic. Not that it matters what I think, but I think it's fantastic. All right, we've got Fenders 53. Good evening, all. Mr. Income finally logs in on a device that allows chat. You are making progress, my friend. It is good to see you, or at least see what you're writing on the live stream tonight. It is great to see you here. And, you get to say good evening twice. So that is awesome. El Dynamico, West Sacramento. Hey, I noticed that you came in a little bit late, but you were quiet, and no, I'm just joking, my friend. Glad you're here. So welcome. You can come anytime you want. I'd love to have you here at the start, but if you are here late, it is fantastic. All right, Mr. Income, Fenders 53. ETFs are the same as mutual funds after you factor in expenses. Yeah, I think that's right. The only difference that I can find, anyway, and I shouldn't be so dogmatic about that. One difference is that a mutual fund is priced daily, whereas an ETF is priced instantaneously in the market. So you can buy and sell ETFs all day long. You can only buy and sell mutual funds at the end of the day. So that's one major difference. But Mr. Income is right that they are exactly the same. They operate the same except for the frequency of pricing. I think that's the major difference. All right, so let's go into. I'm going to push through some of these. You guys are chatting with each other, so I'm a slow reader, so maybe I should just put them up there and walk through them with you guys. But well, here's Shamir. This is good to know, man. You had a Coke Zero earlier this evening, and a Big Mac and fries. So you're hitting Coca-Cola and you're hitting McDonald's. I think you might actually own both of those. So good job, my friend. I don't know about the health aspects of that, but that's not my gig. Jim Betts, hey, buddy, I hadn't seen you in a while. Welcome back, my friend. So Jim is here, and we have Clayton Maherg is here. So it is great to see you, buddy. And Dresh is here for the chicken picking. We're going to do something next week. I don't know exactly what it's going to be, but we are going to make this chicken thing work. I will figure out a way to make that work. Let's see. Jim says his only ETF, Sophie's, TGIF. Have I got that on the screen? Yeah. Weekly payer was liquidated. Hoping to get all my money back to reinvest. Do you know how liquidations work? No, I don't. I didn't know they had liquidated that. So, but my guess is that they would need to liquidate all of the holdings. I'm just guessing. Got to get my bucket out of the way because I keep bumping it. So my guess is they would liquidate all the holdings. All those holdings would have to settle. Any dividends would have to come in. Those would have to settle. And then they would distribute the cash from those liquidations in a liquidation of the ETF. Hopefully that makes sense. That's my guess. I don't know exactly. I've never been a part of that before, but that is what I am expecting. So good luck with that, Jim. Let's see. Mr. Income says you have to give chickens only 2 or 3 choices, unless you name a chicken Peter Lynch and then pay very close attention. This is Mr. Income, by the way. Yeah, I know who you were. I just didn't know if you wanted people to know that you were Mr. Income or not, because and that's kind of an interesting thing, because there are people that I actually know their real names, but I call them by their whatever name is on here because they don't want everybody to know what their real names are. So so when that comes up as Fenders 53, that's what I say until I see that you have shared who you are. So, but I appreciate you doing that. Yeah, the chicken thing, I guess where I was challenged is, I'm going to scoot closer to the mic. Where I was challenged was if I'm picking the 2 or 3 stocks and then a chicken is picking out of that, then did the chicken really pick it or did I pick it? So that's kind of where I got stuck on the chicken thing. I want the chicken to just pick a stock at random. I want it to be a totally random thing. From, however many stocks there are, there's like 4,000 dividend stocks, maybe 12,000 total stocks. I don't know. That's kind of where my head's at, but I can't figure out how to get a chicken to pick 1 out of 4,000 stocks. So that's kind of where I am. Hopefully I've explained that okay. Now we've got a question here, and I cannot read the name, so I apologize, my friend. I am going 40% SCHD, 40% DGRO, and 20% individual stocks in my dividend portfolio. Those are very good ETFs. I own DGRO, and then SCHD is I have my holdings as a proxy for SCHD. So I think that's good. You might consider having some exposure to the S&P 500. I don't know, your personal situation, but it's worth considering anyway. So let's see here. So shaping is shaming Mr. Income by saying he is here because of him. So shaping, it's great to have you here too, buddy. Oh yeah, okay. So Shamir, how close are you to retirement, Shamir? You're like young, I thought. And you do own both Coca-Cola and McDonald's. That's great. I thought you did. And Tutomi is here. Hey, welcome to the program, my friend. So let's see, John J. Liquidation of ETFs is strictly regulated. When an ETF closes, any remaining shareholders will receive a payout based on what they had invested in the ETF. Receiving an ETF payout can be taxable. However. So yeah, that is exactly right. So whatever gain or loss there would be on the liquidation of the holdings inside the ETF would create a taxable event. And John Jay is exactly right on that. So we have Shaping asking if I like cows, and I'm assuming, let's see, it holds 100 stocks with the most free cash flow. It's done amazing. I thought you were doing a joke about chickens and that cows was a takeoff on that. So no, I do not own cows, and neither kind. I don't have real cows, and I don't have COWZ. And but I'll take a look at it later. It sounds like it's an ETF, so I'm not familiar with it. So that's good. Suzuki Man, welcome to the program. He loves fried chicken, and I do too, my friend. I am a sucker for some fried chicken. Let's see. Jim's got a suggestion here on the chicken. So let's think about that for a second. Roll out some butcher paper with the S&P 500 on it, and what the chicken poops on is a winner. That's not a bad thought. That's not a bad thought. I had to get a really big piece of paper. Maybe they come in the roll, right? So that's not a bad thought, man. I may have to look into that. That's a good thought because chickens poop. I mean, that's they eat, they poop, and then they lay eggs. Those are the three things. All right, Shamir, he's 43, plans on retiring when he is 65. So that is fantastic. That's a great plan. And, it's always good to have a plan. I had a plan. And if I didn't have a plan, I would not have reached the goal that I set out for. So having a plan is critical. And I applaud you, Shamir, for that plan. Let's see. If you have this is Greg. If you have a watch list, for instance, Pepsi, then put some feed around the can. Oh, the Pepsi can. Do that with other stocks you're watching, McDonald's, fries, and see where the chickens go to. Yeah, that's certainly a way to do that as well. I think Pat likes Jim's idea also. Let's see. So Jim's thanking John Jay for that advice. So yeah, I appreciate your advice as well. I'm kind of leaning toward the chicken poop thing. I kind of like that. So let's chat about Pinnacle West. Pinnacle West is a utility company. Actually, it's a utility holding company, PUHC, Public Utility Holding Company, out of Arizona. It owns its major utility is APS, which is Arizona Public Service. Now, Arizona Public Service has been going through a rate case with the ACC. I'm going to throw a lot of alphabet soup here. ACC is the Arizona Corporation Commission. That is the regulatory body that regulates the rates that can be charged by Arizona Public Service. And if your eyes are glazing over at this point, don't worry. This is like nerdy stuff, but we're getting to a point here. So I think it was 2021. APS had a rate case. They were making a return on equity. And for those of you who don't know, this is important. As a matter of fact, this might be worth the price of admission to the live stream tonight. Oh, wait, it's free. But anyway, it's worth the price. When a utility makes money on its return on equity that it gets for investing in what they call rate base, which is basically equipment that goes in service. So they have, let's say, a bag of investments, and then they are allowed a certain percentage return on those investments, and that's what the shareholders get to participate in. What happened in 2021 is that the ACC, which is the regulatory body, said, no, you're making, I forget exactly how much it was, a little over 10% of return on equity on this bucket of money. They said, no, that's too much. We're going to knock you down from 10 point whatever it was to 8.7%. Huge cut. And immediately the stock price tanked, right? So then a little bit later, I think it was about a year later, they came in and adjusted that from 8.7 to 8.9. They being Pinnacle West or APS, actually filed another rate case. And that was decided, I think, either late Thursday or early Friday of last week. And they have given them their rate increase that they're looking for. My understanding is, now I haven't seen this other than a friend of mine has told me what he believes that the return on equity that they gave them was, but I think it's 9.55%. That is the number that was requested or suggested by the ACC staff. So 9.5. It was either the staff or the administrative law judge. I don't remember, but one of those two recommended that. So if they go from 8.9% to 9.55%, that's a pretty decent sized deal. And so what I did over the weekend is I went in and I calculated what I believe the impact of that is in earnings per share for Pinnacle West, and came up with a number, multiplied that by the current price to earnings ratio. And I'm expecting once I was actually expecting it to happen today, but it did not. So it makes me wonder what I'm missing. But I'm expecting once we have the earnings release tomorrow, which I don't expect to be great. I think they may actually lose money in this particular quarter, the fourth quarter of last year. But I think their guidance, because of this new rate case, is going to be really good. I think they're going to show a lot better earnings moving forward. And more importantly, it's going to give them the cash necessary to continue raising their dividend at a larger rate than they've been able to the last couple of years. So I think there's a lot of positives there for Pinnacle West. And the reason I share that is because I'm going to go ahead and put this back on the screen and move this up. You can see that I believe this so much that I have made the transactions to have Pinnacle West be the largest holding in my portfolio at 6.59%. So that's about $97,000 that I have invested in Pinnacle West, which part of the challenge, right, when you have a portfolio is you want to manage risk. Now, I could put 100% in Pinnacle West, but that would not be appropriate. It takes different skill sets to stay wealthy than it does to get wealthy. So part of risk management for me is that I try to manage the amount that I invest in any individual company. And this is pushing the limit for me with Pinnacle West. But I believe so strongly in what I think we're going to hear tomorrow that I raised my bet up to about 6.6%. So thought I would share that with you guys. Hopefully that is meaningful. So let's see. So Shaping says, tell me again why I shouldn't go all in on Tesla. You can do whatever you want, my friend, but I certainly would not. Let's see. So Thailand, Bjorn Oslung, it is great to see you, buddy. I don't know that I've ever seen your name before, so it is awesome to see you on the broadcast from Thailand. That is incredible. This whole internet thing is really, really cool. So Tutomi has a question. What does Tutomi want to know? What you will do if you own the stock and they stop increasing dividends for 6 quarters in a row and you are up on them over 35% on share price? Well, I think it would depend on why that is. It would depend for me. It would depend on whether my investment thesis is still intact. So if a company, for whatever reason, needs to hold its dividend at a certain level for 6 quarters, I'm not terribly concerned about that. I want them to use their capital in the best way possible for shareholders. And so if they need that cash for 6 quarters instead of giving me an increase at the end of 4 quarters, but I understand why they're doing it, I'm okay with that. It doesn't really, cause me a lot of angst as long as my investment thesis is still there. However, if they're in trouble, and I don't know if they are, because you say you're up 35% on them, so they must be doing okay. But if they're in trouble and there's fear of cutting the dividend, I don't know. I guess I'm behind on my my video, but anyway, if they're in trouble, then I may consider cutting them if I think they're going to cut the dividend. So because that's one of the things that I value is what they give me as part of the cost allocation, and I'm fine with companies who have a low dividend and use special dividends. Whatever works best for their business model. So anyway, I know it's a hypothetical answer, but I think it was kind of a hypothetical question too. If there's a specific stock that you want me to look at, I'm certainly happy to do that as well. So Greg says, speaking on ETFs, be mindful of how long they have been around. That's a great point, Greg. I'm glad you brought that up. 10-year track record as an example. not just 1 or 2 years. Average annual return and expense ratio is worth looking at. Yeah, those are all great points, and so I'm glad you brought that up. So Jim says, I saw you had ADM as one of your holdings. Thinking about adding a position. The accounting fiasco seems to be overblown. Only one unit was affected, and it was a unit that was acquired by ADM. So that is my other bet, Jim, because I also believe that the accounting shenanigans have been overblown. And so I have about 2.5% maybe in, let me see. I think it's around 2.5%. I have to find it. Oh, no, it's 3.6%. I have 3.6% of the portfolio in ADM. I don't expect that to be a long-term investment for me, but I think this is way overblown. I agree, Jim, that it is that based on what we know, right? And that's all we can really look at right now. The CEO, once this was announced, he came out and gave guidance for the fourth quarter at $6.90. It was originally at $7. So they shaved about 10 cents per share off of their guidance, but that's not anything, dramatic. That's, less than, 1% or maybe 1.5%. So it's not a huge deal. But, the thing we don't know is the devil's in the details, right? So we don't know what the details are. We only know what they've shared with us publicly. So I think anytime there is major uncertainty like this, the market thinks the worst. And in a case like ADM, I think they're pricing in the worst. And so because of that, I have invested. And again, it's within my portfolio percentages. So my diversification percentages. So I'm not like going crazy here with the amount of the holding, but I do think it is worthwhile, at least for me, to add ADM to my portfolio, which I've done at 3.6%. We'll see how Pinnacle West comes out tomorrow. But at some point I might even throw some more toward ADM. The last I heard, they were supposed to report by the end of this month, and today is the 26th. I think this is a leap year, right? So they've got until Thursday to report and keep their word on that. And but they will report only when they are ready, and they're not going to report just because they say they were going to report by the end of the month. If they've run into some other issues, it could be delayed, but hopefully they'll report soon and we will know more. Now, once we know more, then there will be much more. I think there'll be people wanting to get back in, and that's my thesis anyway. And therefore, it will take the stock back up, not back to where it was, but if it hits that $60 level, hey, that's not a bad return for holding the stock for a month. So. All right. So yeah, Pinnacle West and Archer Daniels Midland are my two short-term pops that I'm looking for here, actually in this next week. So Shamir asked, if a stock stopped increasing dividends for almost 6 years in a row, would anyone here still hold it? And he's looking at Kraft Heinz. I am, and that's a great question, Shamir. I am a dividend growth investor. And so I want companies who are routinely growing their dividend. It doesn't have to be a huge growth, but I want not only growth in earnings, but I want growth in dividends. And so if they have not grown their dividend in 6 years, I'm probably not even gonna look at them. So I need them to have grown their dividend at least the last 5 years before I would even pay attention to them. So yeah. I think John here is saying nice dividend on Pinnacle West. And that's true. They at least as of yesterday, I think it was at 4.95%. Here, I'll look real quick. I'll sneak it in real quick. PNW, Pinnacle West Capital. Here we go. I'll even show this to you guys. So this is Simply Safe Dividends. You can see now, because the stock went down today 1.7%, that it is a dividend yield of 5.08%. I added some shares even today in this particular stock. There is no news at all. I can't find any news on this rate case other than some stuff that I find from the company. So I think they're waiting for the company to kind of figure out what the future looks like and tell them, and then I think they will react to the stock, unless there's just something I don't know. But take a look at this. Let's look at this, because I was thinking about this today. What happens if I miss something, right? And so, not only have they grown their rate base, but their ROE is growing. So their earnings are going to be higher because they have invested more money, as well as they're getting more return on the money they've invested. So I don't see a downside there. The other thing I will point out, let's look at this real quick. This is just for fun and entertainment purposes, I think, is the way to think about it. But when I look at the 52-week range, they have 65 to 83. So they're down near the bottom of their 52-week range. So, why would I think that because they're going to make more money, that they wouldn't be worth more money? So I don't know. Those are my thoughts on it. I may be a little too simplistic, but we will see tomorrow. And I know you guys will either say, great job tomorrow, or you are a buffoon. So we will see. We'll see which one that is. Let's see. Arizona is growing fast, and Pinnacle West will benefit from the growth. Yeah, Kevin, that's exactly right. Arizona, especially the Phoenix area, is one of the fastest growing areas in the country, and APS is taking advantage of that. So I think you're exactly right. I mean, not only do they have growth in rate base, but they also have organic customer growth. So I don't see any downside to owning this particular utility. So, all right, here's another question. Thoughts on FDVV? I think that is the Fidelity dividend ETF. And I looked at them at one time. I think their performance looks really good. I would guess compare them to SCHD. I think their performance looks really good. The only challenge, or the only question I had, is their expense ratio was pretty high. So that pushed me away from it. But when I looked at performance, their performance looked really good compared to SCHD. So those are my thoughts on it. I think it's a fine ETF. I just found that the fees on it were pretty high. So our utility stocks reporting Q4 earnings on February 27th, AEP, SRE, and Pinnacle West. So AEP is out of Ohio. SRE, I'm trying to remember what that is. Let me cheat. You guys don't see this, but I'm going to cheat. Sempra, Sempra Energy. I think that's out of California somewhere. So those are good utilities. But I don't own either of those. I do own Pinnacle West, and anyway, that's what I own. So I'm really interested in Pinnacle West tomorrow. So I will be up early. I'll probably put on a tie, have a cup of coffee. No, I'm just joking. But I will get up and listen to the call, if that means anything. Oh, yeah. Tutomi, thanks for answering the question. Really appreciate it. The company name is UNP. That's Union Pacific. Those railroads are tough, man. It's hard to know. I wouldn't be overly concerned with it at the moment, but I have not done a lot of research on the railroads because of that fiasco with East Liverpool. Actually, when we lived in Ohio, I moved from Ohio in 2021. When we lived up there, we lived maybe 20 miles from where that derailment was. So that was not a great look for the railroad. But anyway, hopefully that works out for you. I think JEPQ is an excellent ETF, even though it's only been around a couple of years. Any thoughts? Let me look that up. I think that is, before I say, let me just look it up real quick. I'm gonna look it up in Simply Safe, because that's a lot easier for you guys to see. Okay, whoops, it don't like that. PQ. The JP Morgan NASDAQ Equity Premium Income ETF. And I was thinking this might be a leveraged ETF. Invest directly. Yeah, and through derivatives. It is a leveraged ETF. And leveraged ETF. So you might have some issues there with decay, but and it's short-lived. So let me do something real quick. I'm going to look it up on here. JEPQ. JEPQ. I want to say this is the sister to JEPI, but I just can't find it fast enough. So let's look at their 3-year history. You can see that they have grown by about 30% over the 3 years. Well, no, that's the same. 3, 1. Looks like they go back to July of 20, or maybe something, May of 22. And they've grown by about 30% over that time period. So, I mean, it looks pretty decent, but I would want to understand the derivative aspects of that, because it could impact its future contributions, if you know what I mean. But it seems like it's done well. Kevin Mendoza. Kevin, do you happen to know if ADR fees on foreign holdings are taken out of the dividend before the distribution or taken out of the brokerage account balance? And are you talking about the ADR fees that are the taxes that are applied to foreign dividends? I'm not familiar with an ADR fee other than the tax that I don't remember exactly what they call it, but it is that tax that you can get back on your tax return. And that is taken out of your brokerage account. My recollection is, I think I remember getting a dividend and then an offset to that. But because of that, I chose not to invest in foreign companies, because I don't want to deal with the tax headaches of all of that. So I chose not to do that. But it will come in, and you will only get the net. You'll get the dividend less whatever that tax is. Let me know if it's not the tax that you're talking about, but I'm just not familiar with an ADR fee for the dividend. All right, Shaping. Oh, Shaping's answering to Tommy. Let's see what he said. They have a history of keeping the dividend flat for more than a year, but I think they are far from a cut. Okay, he's talking about Union Pacific. Let's see. So Shamir is answering Kevin, saying, does the coverage area for Pinnacle West include Phoenix and Tempe, the fast-growing areas of the state? I think I heard the utility for another one didn't have them as clients. Yeah, so Shamir, I don't know about Tempe, but I do know that Phoenix is included in the service territory for APS, so which is owned by Pinnacle West. So hopefully that's helpful. Oh, good. Mr. Income is a Kevin fan, buddy. I am so glad you're here tonight. He may not have your exact investing style because he is in a different place type, but you won't get hurt learning from him. That's great, my friend. I appreciate you saying that. Those are great words to hear. And I just really enjoy this kind of conversation. This is what I live for now. So So, Miguel, welcome to the program. Can you take a look at Tyson Foods? I'm not really sure I want to, my friend. It gets a little bit dirty, but we'll take a quick look. Let's do that. Tyson. I used to own Tyson, and I listened to their broadcast on their the future growth of the company. It was a special meeting they had with shareholders, and this was not convinced that they had a future plan. So yeah, their dividend safety is 80, and they have dividend yield of 3.62%. They did get reduced in back in December, from 90 to 80 because there's a shrinking cattle supply. Maybe I should buy some cows. Wow, their payout ratio at 165%. Doesn't look very good, but their forward payout ratio is 75%. Let's go down here and look at those in detail. So you can see here they were 23. Well, in 23 they had 143% payout ratio, which is not very exciting, and 75% also is not very exciting. So they are definitely struggling. I think they're cyclical. So maybe let's take a quick look in fast graphs. Fast graphs is a great way to look for cyclicality. And, you see some of that. And now there's a time from from 2009 until 23 where they had a bit of cyclicality, but man, they came screaming down in September of 23. So that's not very fun. But it looks like they're on the way up. I mean, if you trust the forecast, it looks like they're on their way back up. Just real quick, let's take a look. Oh, I've made this so big that I can't get to my other stuff. Let me find it. I need to go to Morningstar. I'm going to look up Tyson. We're going to look at their fair value according to Morningstar. And Morningstar has them at an $83 fair value, currently at $54. So they are at a 35% discount. I think it depends on how long you want to wait. Miguel, it looks like they're coming back, but that's just my take on it. Let's see, holding and adding Kraft Heinz. Shamir earning more than inflation does have its value. That is true. I mean, if you got a dividend that's being raised at a greater rate than inflation, that means something. Let's see. Kevin Mendoza says the two main utility companies here in Arizona are APS and Salt River Project. APS covers almost all of Phoenix. Not sure about Tempe. Their website should show coverage. So that's exactly what I said. I think I'm not sure about Tempe either. So let's see. Yeah. So Shaping says that Mr. Income and I might be best friends in real life. That might be true, but he lives in the north and I live in Alabama. So it's a pretty far piece from each other. Let's see. I think Kevin's talking about a dividend that he got. There was a withholding fee, even though I have the security inside my Roth. Okay. Well, that's interesting. I'm not aware of that. So we have X to the what? X to the who? X dividend dad is in the house. Welcome, my friend. Glad you could make it, man. It's good to see you. And we got Robin here. Robin, it's great to see you in a broadcast. So what do you think about Southern Company and Next Era Energy? So I think Southern Company is very similar to some of the other utilities like AEP, Duke Energy. I kind of put all of those in the same bucket. Southern Company has a huge investment in a nuclear, I think it's called Susquehanna or something like that, a nuclear power station, probably the first one that's been built since TMI, which is not too much information. It's 3 Mile Island over in Pennsylvania. So, I'm not a huge fan of Southern Company in terms of an investment. I like them as a company, but I don't invest in them. Next Era Energy, however, is somebody that is very worthwhile. They've got a little bit of campaign finance shenanigans going on. That's the only thing that I can see that would cause me to pause. So I invest in Wisconsin Electric (WEC), but if I didn't, I would invest in NEE. They WEC and NEE, I think, are very similar companies. So those are my thoughts on that. So hopefully that's helpful. I would, I'm not interested in Southern Company, but I would be interested in NEE if I needed another utility. But as you saw with my Pinnacle West investment, I think I'm pretty much tapped out on the utility side. All right, we got Shamir's talking to Kevin. Let me see if he says anything. If you hold foreign stocks in your traditional, yeah, I think that's right. Okay, good. So Kevin Mendoza says, yeah, it's the tax. It's that foreign dividend tax that I just loathe. I just don't want to deal with that. So we got Suzuki Man. Hey, Kevin, why have you done with the exchange Cummins has offered? Okay, so that's a great question, Suzuki Man. And we are almost out of time. So, no, I'm just joking. I will certainly answer this question. Cummins is spinning off a company that they still own about 80% of it. Let's pull that up. There's an actual letter here, and I will scan through it. And if you want to, come back later and slow the video down, there is here it is. So first of all, they have a very safe dividend rating. Cummins does, so that's good to know. So Cummins is splitting off Atmos Filtration. And it basically says what shareholders need to know. I'm just going to kind of scroll through this, but basically they say that it's a filter system, and personally, I like the future of where Cummins is heading, and with hydrogen and the other alternative fuel systems. So I don't know that I want to stay in the past with the filtration system. That's not why I'm investing in Cummins. I'm investing in Cummins for the future. So I'm not interested in staying with Atmos filtration. So just so you know that it is the same type of offer that Johnson & Johnson had. And I lost my cursor here. Give me a second. Where am I? There I am. All right. So it is the same type of deal that Johnson & Johnson had when it split off from, when it split off the other piece of that. And why am I forgetting the not Kenvue? Is it Kenvue? Yeah, Kenvue. So when Johnson & Johnson split off Kenvue, it was not a spin-off. It was a split off. And that's what this is. And that's what that article said. So a split off means that you can trade your shares for the other company at some discount, or you can keep your shares, or you can do some of both, right? I choose not to trade any of my CMI Cummins shares for Atmos Filtration. I just don't want to stay in that past. That is not my investment thesis for Cummins. So hopefully that helps, Suzuki Man. All right, man, we got a lot of questions coming in. So I'm going to stay with it, guys. So let's just keep going for a while. On a whole other topic, Kevin, we would also like to go to Egypt for visits. Did you enjoy going there, and which travel agency did you use, or did you go on your own? So first of all, I thought Egypt was fantastic. I would go there again. We went in November. We went to Israel, November of 2022. Went to Israel, and then I think it was May or June. It was June timeframe. we went to Egypt, and the both of those trips were phenomenal. I would go to both places again. The Egypt trip though was very good. I loved the history, the ancient history there. If you love ancient history, you will love that. We used a company called Trafalgar, and they had it was basically you fly into Cairo, and then you fly into the middle of the country, get on a boat in the Nile, and you basically float down the Nile and float back up the Nile, get back on a plane, go to Cairo. But you get to see a lot of the old stuff, and it was fascinating. I loved it. So definitely would go back. I would highly recommend it. Do you pay taxes on foreign companies in a Roth account? I don't think so. I don't think a Roth account would pay taxes. But I say that. I should look that up because it is an after-tax account. So scratch that. I will. I'll do some research on that. I'm not really sure because I don't invest in foreign companies in any of my accounts, so I just don't have the experience with it. Looks like some conversation. All right. So fantastic. So I think we have worked through the questions. Remember, next week, I've got my buddy Russ coming on. We're going to be talking about the pros and cons of dividend investing. And it may be that we talk about this chicken thing and how we're going to work that out. And then I may just build a portfolio, probably be a paper portfolio, but I'll build a portfolio, and maybe we add a stock every week or something like that to the chicken portfolio and track it over time. So I don't know. I'll do some thinking on that. But I really appreciate you guys being here, and I look forward to this every week. I'm really glad you're here. I love this this community that we have. I love the way that we can kind of work together, ask questions. None of us have all the answers, but it helps to kind of sharpen each other as we work through this process, because at the end of the day, we are all going to be winners in this thing called dividend investing. So I'm going to get off of here now, and I will talk to you guys on the next one.